Let's go, boys! This lower time frame chart can be a lot of noise. So one important thing that I have learned through experience is to scale. Yo, what's good, boys? We are up $75 today, bro. And today was straight ass water. As you guys can see, I took a buy and I took sales too. Now let's break this shit down. So in short, bruh, I was bullish for the day. Why? Because we ran into that daily order block mean threshold previous day. We swept out a previous daily low during the previous day. So during this day, all I was looking for open, low, high, close. Going to the 30-minute chart, we already opened, dropped lower, and London ran higher, already at a premium. And in order for me to be a buyer, I would rather be a buyer in a discount. When you measure out this range low to high, we have the 50% here. Where is our discount? FEGs, order blocks, whatever PD array, whatever key level you like. Well, for me, it was this FEG right here. Also, we have midnight open price lined up with the new week opening gap consequent encroachment. So as soon as we dropped down into that key level, I was watching what price was gonna do. Now when 9:30 had opened, right, we dropped down into that key level, and the first thing that I saw that was very clear was this bearish fair value gap. Notice how we ran into that bearish fair value gap and we dropped lower, running out this low. So as we were running out that low, I wanted to see us run up into that fair value gap, displace above, come back, retrace, and then go higher. But notice how ass water this price action was, bruh. Chop, 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 chop like a barcode. And while I was watching this price action, my intuition, my gut was telling me I should not be trading this shit. I'm not trading this shit at all, bro. I literally was about to walk away from the chart, right? We start running higher, even with that displacement through this FEG here. My intuition and gut was still telling me, okay, don't take no buys, get up from the chart. Today is a choppy day, bruh. It's just straight ass, don't take a trade. But one thing I have to remember is this lower time frame chart can be a lot of noise and it can confuse me. So one important thing that I have learned through experience is to scale up just a little bit higher. When you scale into the 15-minute time frame, you have this bearish inversion FEG that price hat went through. Then on the 5-minute chart, you have this bullish fair value gap, very clear, right? Also CSD by closing above these consecutive down close candles, and this is where I took my first entry. I took my entry at that 5-minute fair value gap, stops below this candle's low, and then targets higher at that relative equal high up here. Now, not only did I take one entry, I took 2 entries on this buy. So I scaled in. As soon as price closed above these 3 consecutive down close candles, open price, that is a CSD. So I was in on $25 on this position, and I entered $15 on this position while trailing my stop up below this low here. So here was my second entry, got in right at that candle's high, and then I was holding for these highs up here. But notice this, as price was going higher, this was a premium fair value gap. So as soon as price had dug up into there and hit that, I moved all my stops, averaged out at break even. So price came down one more time, and we're starting to get to like 12 o'clock, which is lunch. And then we came down into that same range again, and then we ran up higher. And as soon as we ran into that fair value gap again, I went ahead and took some partials just like that in my first position and held runners to that high. So I locked in about $16 or whatever, right? And then as we started trading more above there again, I took more out of that position, and then I started trailing my stop just above this candle's low, right, for both of the positions. So that way I locked in $25 for the day, right? Now coming into PM session, while I'm still holding my trade, we came back to these lows, this area, whatever, right? And we started running up again, and I was giving it an opportunity to potentially run through this FEG and start running to that relative equal high up here. Now, as we started running above this high here, I wanted to see speed above that high to attack this high and then these highs, right? I didn't get that. We started displacing lower, and all I needed was about $20 just to be up $75 for the day, risking $25. So that's about 3R. What I did was I cut my trade here because it was low probable that price was going to continue to go higher. We're having problems closing through this FEG. Look how the bodies are holding this FEG. So I'm like, okay, bro, I'm gonna cut that to shorts. And let's get into that third execution that I took to secure a $75 day, bro. All right, so as you guys can see, I'm over here setting up to potentially sell this. You can see I'm up $31, up $11 on that buy, right? So I'm like, bro, fuck all that, bro. I'm about to cut this buy. I'm gonna enter this sell and I cut that buy, bro. You see I'm up $330, only risking $5 because I want to be locked in up $50 for the day. So I'm risking $5 here to basically make about $15 or whatever, just to be up $70 for the day, right? My first TP was at where I almost got in at, which is this inversion FEG. Okay, so boom, that's what I was looking for. We ended up expanding lower through this fair value gap here, and then I'm like, am I being greedy by waiting for it to come all the way down into here? So what I did was I ended up moving my stop right here. And why did I put it right there? Because you have relative equal lows right there. So notice we came up into that inversion FEG again, hit it to the T, and then we started going lower. Now at this time we're starting to come into that macro time, which is what time was that? The 250 to 310 macro. So we started expanding lower, right? Boom, we expand lower. I marked out the relative equal lows there, and I'm like, okay, we're getting close to there, so we shouldn't be expanding now because we're inside of that macro, right? And then I marked out this fair value gap right here. Now I'm only risking $2 now because I trailed my stop to this high. Since we're in that macro time, macros usually straight drop to run to liquidity, right? So I'm expecting this to run to that liquidity pool. So what I did was I scaled in like $2, $5, $2 or whatever, very, very, very small. Whatever I had here, I moved my stop. Since I moved my stop just a little bit down just to mitigate risk, I entered more, right? Because I'm not expecting price to come back into this fair value gap, because this is not a real fair value gap. It's not really real efficiency. All this whole range is balanced here. This is what I'm looking for because we expanded through this low. So this is the real inefficiency right here. Ended up entering the sell there. Boom, there's the sell. So now I'm in two positions. I'm scaled in, still aiming for that low. And as soon as we take out that lows, that would be $25, well, $20, right? Only risking like $4, which will secure my $75 day. So we started displacing lower, right? Displacing lower, came up one more time, and then here we go right here. Bang. Nope. Yo. Let's go, boys. You know what I'm saying? 5. Let's go. We here. Little stupid ass one. We up $75 for the day. What can I tell you, bro? 3R. You know what I mean? Risking low, not risking high at all, bro. I hope you guys enjoyed that breakdown. If you did, smash that like button. If you're new to the channel, why haven't you subbed to the motherfucking channel yet? You know what I'm saying? So sub to it and share the video. I'll see you guys later. Peace.